let's just take a look here. Figure out if we are going to be live here soon. I believe we will, but let's just give it a minute. Looks like we are on YouTube. Okay. So tonight I'm going to go over a couple of different stocks so you can see the news surrounding these stocks. One of them is CCIV, which is Churchill Capital 4. The other is PLTR, DraftKings, and NKLA. So I just want to go over some of the things that are trending on Google search right now so that people can have a visual way to see what's going on in the news. Come see here and I can break things down a little bit. I try to keep these short, so if you're interested in learning more, you know, there's a lot more data out there that you can find, but I'll give you some pretty good information here so that you can make up your own decisions on what's going on surrounding the news of these 4 companies we're going to talk about now. And so the first one, like I said, is Churchill Capital Corp. Let me zoom in here a little bit. Hopefully it'll make it a little easier to read this stuff. And so, so I came in here, you take a look. It's actually the #1 search on when it comes to stocks for searching in Google. And so I came in here, it's like, what's going on with this company? I've never heard of it before. What's going on? And there's a reason why I've never heard of it. So I started looking into the news here, and it's a SPAC. Now, I just want to talk to people about SPACs right now. I feel like there's a lot of hype surrounding these type of investments, you know, and so, you know, there always has been, and especially with the amount of money that's getting pumped into the economy, a lot of these SPACs are taking advantage of investors who are eager to throw their money at something in hopes to get good returns from it, right? But I actually found something very interesting. Now, this is probably, let me zoom in on this as much as I can here. And then go down to the part that I was reading earlier. So SPACs, so Harvard did a study on SPACs and broke down some numbers on them and showed how effective or not effective they are when it comes to investing your money. And so the one thing that I found is, I mean, well, the very first thing that they say is that although SPACs issue shares for roughly $10 and value their shares at $10 when they merge, by the time of the merger, the median SPAC holds cash of just about $6.67 a share. So essentially, you put money into it and you're going to lose 33% on average. So the median number that it or price that it lands on, you'll lose 33% of your money right off the bat. And so I am truly like these SPACs. There's a lot better way for people to invest their money. There are proven strategies that will make you money and won't lose you 33% of your investment right off the bat. Now, I realize that these are very speculative and some people are interested in doing speculative investments, but there might be other ways that are a little more effective when it comes to investing into different companies. And so, you know, they go on talking about, you know, this is a pretty interesting study. What I'm going to do is I'm just going to leave a link below with this Harvard study so that you can take a look at SPACs and read through this. A lot of it's pretty hard to chew off. I read the whole thing, but basically they break down all the numbers of SPACs that have happened between January 2019 and June 2020, and it really, the numbers aren't good when it comes to the types of returns people are getting off of SPACs. And so, you know, I come back and I take a look at this, and you know, they start to talk about the company, hey, this and that, you know, this, they were going to merge with another company and you know, maybe compete with Tesla a little bit when it comes to the EV world. they were going to merge with Lucid, and ended up, I don't know if it happened or not, but just off of the rumors of them merging with Lucid, their stock price like skyrocketed like threefold, right? And so since then the stocks kind of come down, the all the hype surrounding this company has dropped off, and now it's kind of like to the point where it's like, hey, what happens next, right? And so it's make it or break it time for these companies. But that's really what it is with these SPACs. You know, there's really no guarantee, there's no for sure, there's no anything, and you know, a lot of people are throwing their money at SPACs, not even truly understanding what they're investing into. So that my personal opinion of SPACs is I just don't agree with them. I feel like I said, there's other ways that are proven to make a lot better returns, and granted, there are speculative positions that everybody might want to hold, or a lot of people might want to hold, and so, but that's really up to you. Do your research, look into the history, look into the sales, look into everything that these companies have before they do their mergers, and so that way you can make a more educated decision on how to where you're going to put your money here. And so it came down, coming down on the list, we got number 2 here, Palantir. And so I was going in and taking a look at the different news surrounding Palantir here. The company's kind of gone just sideways. They're not really performing. They're not doing great. They're not doing bad. But I found an interesting article by Barron's. Barron's, if you're not sure or familiar with what they are, is they mainly do news surrounding finances only. They do a lot of ratings. They rate different financial planning companies. They do a lot in the world of finance. And so they do their research, and the articles that they put out are generally very numbers based. And so it's good to take a look at these things when making decisions with your investments. And so see here, let me just come in, and there was one. Okay, so the analyst that took a look into Palantir, he's giving it a hold rating at $20. The target price is $20. It's currently trading at $24, and he was saying that he feels like, based off of the sales and the numbers and the financials, that the price he feels is should be closer to $20 a share. He points out he is not a software analyst, but he writes. But he increasingly bumps into the data analytics firm in both national security realm and the old economy, where the technology is shifting at a rapid pace, right? And so he works a lot with governmental bodies, and so he bumps into and sees these numbers of Palantir, especially since Palantir is mainly like a government. They have government contracts, and so he runs into them, he sees what's going on. And so this is the part that I found that was pretty interesting. He said Copeland thinks that Palantir's government business is likely misunderstood. He notes that at $610 million in government revenue last year, the company is a tiny player. It's not even among the top 100 government contractors. He adds that from a capability standpoint, they address some of the Pentagon's highest priorities. He notes that the military is awash in data after 20-year plus expansions of intelligence collection. Pulling this data together to enhance warfighting capabilities and do more with less in a tighter budget is precisely what the Department of Defense wants. And so Palantir is helping make these things a reality. And so Palantir is actually doing very, very good work for the government. The government's very happy because they're saving money. They're able to allocate some of their budget towards other things because it's saving the government monies. And that's exactly what the Department of Defense wants, right? And so these are all really good things for the company. It's, it bodes well. So he notes that he is bullish on the company going forward, but he has some concerns considering the current valuation of Palantir right now. And so, you know, you take a look at the numbers, and that's what he feels like. You know, I'm going to leave this. I probably should have increased the size of this as well. Sorry, guys. And so I'm going to leave this in the notes below as well. So you can definitely go in and take a look at this article and read through it. You know, if you know, as far as what his target price is, he says it's $20 a share, currently trading at 24. And so DraftKings is the next one that we're going to be talking about on the list here. You come in here, take a look. It is the number 3 stock that is being searched on Google right now, at least over the last couple of days. And so you come in, DKNG is DraftKings. They mainly handle trading and bets and things like that, and you can do it all from your phone. And there's it follows sports and a lot of other competitive online games and things like that. And so there isn't really good news surrounding DraftKings right now. So, you know, they did have a whoops, camera died there. So they did close the week a little strong compared to the rest of the market. Compared to the S&P, they were up 0.77%, but that's really not the news that I feel like this article is going over right now. They go in and talk about how the company's lost 10.39% in the last month. At the same time, the consumer discretionary sector lost 2.43%, while the S&P gained a total of 7.34%. So essentially what's happening is there's some rebalancing going on in the S&P and the stock market in general. And you'll also see this bleed through. There's a lot of other things going through with the actually, we've already gone through a lot of them, but a lot of the tech companies are kind of starting to stabilize and show a little more stability and show their real value as far as where they should be valued at right now. And so this same thing is happening with DraftKings right now. So they're coming down in value as far as what investors are willing to evaluate these stocks, these type of companies at right now. And so the bad news for DraftKings is that the company is expected to report earnings per share down 50 cents. That's down 177.78% from the prior year's quarter. And let me see here. And so, yeah, and so estimated call for earnings of $1.84 less per share compared to the previous year. And so it's essentially not the greatest news when it comes to these guys. Like I said, I'm going to leave this link down below. One of the interesting things that I found is, I don't know if you've heard of Zacks, but they rank different stocks, and it's it's similar to like Morningstar, or there's different rating systems out there, but Zacks rank system has proven an outside audited track record of outperformance, with number 1 stocks returning an average of 25% annually since 1988. Over the past month, Zacks consensus earnings per share estimated has moved 3.6% lower, and Zacks is currently sporting a Zacks rank of number 4. So it's they're leaning heavier towards selling the stock. And in the gaming industry, they are not. There's other companies within the gaming industry that are outperforming DraftKings. And so let's go over to the next one here. I didn't really want to go over this RKT because remember exactly what it was, but I think it was another SPAC, and I've already talked about SPACs. Not a huge fan of them. But NKLA, so Nikola, I can't believe these guys are still in the news. It seriously shocks me. Like, I don't understand why people, I really hope people are not invested into Nikola right now. I really, really don't. So, but let's just take a look into it, you know. So, and for those who don't know what Nikola is they are, you know, they started to come out. There's a lot of news surrounding them. They are another EV player. They're interested in doing, I don't remember what type of, it was a hydrogen. Let's just take a look here. Nikola Motor Company. Oh, wait, that probably showed it right there. Now, well, they essentially do electric trucks, and they were also, you know, interested in getting into essentially the semi, you know, hauling world, but doing it in an electric vehicle way, right? And so what happened is there was a bunch of controversy surrounding the CEO. He you know, he talked a lot on Twitter. He's kind of a big personality, right? He put out a video that he shouldn't have put out, though, because the video showed a working vehicle when they did not have a working vehicle. And what they had done is they had rolled it down the hill. There's a big article, big thing blew up about it. Someone exposed them, and he was let go as CEO. So he had to step down, and he's no longer the CEO. But that boded bad for the company, because guess what? Tesla and our good friend Elon Musk just came out looking like the internet's boyfriend on this thing. Everybody loves that guy, and so, you know, he's definitely the people's champion when it comes to the electric vehicle world. And you know, it just was bad timing for Nikola. But at the same time, the thing that I feel like is going to eventually set Nikola apart from Tesla is the fact that Tesla has so much data on autonomous driving. Like, they have an insane amount more than the next closest person, as far as like data that they're able to use to put towards having a safer, you know, autonomous driving. They also have like the caravans where the Tesla trucks can drive like 3-4 in a row. You know, I think it's in this video somewhere. Let me mute this. How do I mute this? Why am I there we go. Okay, I don't remember exactly where it is. It's not going to do it for me either. But essentially, in the video, in this presentation, Elon Musk comes rolling up into this with his Tesla semi truck, right? And he shows in the video one person driving the Tesla semi truck, and there's like 2 or 3 autonomous trucks driving behind him. Now that will absolutely change trucking and transportation and logistics as far as moving product around the nation. It's going to change so much. It'll require much less man hours and manpower to move these things. And so, you know, it's definitely, I feel like they have a huge competitive edge. And when I say they, I mean Tesla, over any of these other companies that are competing in the semi electric vehicle space. So I feel like Nikola, same thing with them. I don't know what is going on or why people are still feeling, you know, bullish on this company. But I mean, you take a look, they're not doing great. You know, they had the big spike. Everyone was super excited about it. And then disaster hit. The CEO started talking a lot and kind of put his foot in his mouth and put out some information that wasn't necessarily true. And so, yeah, but hey, look guys, if you found any of this information useful or are looking for more, like I said, I'm going to leave a link below with all of the or information with the links below to all of the information that I've gone over today. So if you want to do some deeper dives into this information or want to see, you know, any of the data that I've showed, it'll be easily accessible there. And if you do have any other questions, feel free to leave a comment to adding on to anything that we've talked about tonight. And I appreciate it, and I hope you guys have a good night.